Hi, my fellow YouTubers, subscribers, learners. This is Teacher Party. My YouTube channel name is Accounting with Teacher Party. My contact details is 081 833 9231 moyopartiswa@gmail.com. So we're still continuing with cash flow from operating activities. So we did IEB, we did the question on IEB 2021. So now I'd like us to look at the government question paper, the NSC question paper for November 2021. Okay, now I think your client name, which is very important, is, Brewer Ltd. And then here in your answer book, they don't want you to fill the shaded area, which is the cash generated from operations. That note 1, they don't want you to do it. The interest paid, they don't want you to do it. But they want you to do, let's go back to our framework. Remember, let's recap. Cash flow from operating activities is derived from note 1, which is profit before tax, add back depreciation, interest expense, and adjust to changes in working capital. If you need these notes, highlight me, and yeah, we'll take it from there. Obviously, there is prettier ones than these. Obviously, I like pretty slides. And after the cash flow, so this is the face of the cash flow statement. So after you put the cash flow from cash generation from operations, you have to put in the interest paid, the dividends paid, and the tax paid. Now, in this awesome example, they don't want us to fill this part, to calculate this part and that. So if you calculate this part, my fellow grade 12, you wasted your time and you're not going to get anything out of it. Okay. So we have to fill in the 3 lines. The 3 lines, it's your, the 2 lines is your dividends paid and your dividends paid. They expect you to know that. And they've given you the total there. So I'll simply copy these two because that's what we're looking for here. Remember I said, these people, they sometimes look for a deconstructed cash flow. So you must know what they're looking for. Okay. So they want to know dividends paid and they want to know tax paid. So let's do calculations. Remember, guys, I'm not a robot. I'm a human, so I'm learning with you. So be patient with me. So let's see dividends. They've given us shareholders for dividends. Do we have any adjustments? Actually, no. So the first thing we need to calculate is the final dividend declared. So they've not given us the share issue at the end, so we need to calculate it based on the share issue at the end. So I'll give you the formula now. Dividend declared equals to share issue multiplied by dividends in rand value. Yeah. I'm looking for dividends declared in rand value equals to share issue, shares issued at the end multiplied by the dividend declared the share. Awesome. So x equals to shares at the beginning $30,000 repurchased. So if it's a repurchase, we subtract. Sorry about that. It's 70 shares. So at year end, the shares issued so now calculating the dividend declared. Accounting is heavily integrated with mathematics. I will forever say that. $191,400. Okay. Now we need to know how much was paid. Again, opening balance opening balance, which would be on the credit side because this is a liability, plus and we're saying we paid our debt to a level of 191,400 remaining. Which means the amount that is remaining is the amount that is not paid, is the dividend declared at the end of the year. So what was paid is the dividend, the balance brought forward from the previous year in terms of the final dividend, hey? In terms of the final dividend, hey? Guys, do you agree with me? Okay. Now, they told us an interim dividend of this much was paid. So we need to add that because we're doing cash flows, guys, remember? Two seven seven 300. So it's a minus 277 300. Then we need to calculate. Oh, let's do the ledger. If you prefer doing the ledger, the same calc. Shareholders for dividends. Okay. Balance. Okay. Ordinary dividends, which is the liability. Method maths, guys. $9,400. Now they're saying the balance at the end. Balance at the end. What we're still owing was clearly the liability was bigger. Like this one. As we got it from the previous framework. So the liability we had was obviously bigger. 306. So the bank should be 306,700. 191,400. 306,700. So this is what we should have paid. So this is the opening balance. So this is the 115. I was just working on the 115. was just working on the 115. The calculation for the 115 if you wanted to use a ledger. Now let's move to tax paid. Hey, tax paid, we're looking at income tax only, guys. Yeah. So our reliable X. $39. That's my daughter checking up on me. Isn't it? That guys just needed to be a mother. Sorry about that. I need to apologize for being a mother. Hi guys, no. I just had to balance there. Okay. Let's do tax now. Tax is 35. I just copy that thing as is. Sorry guys again. I had to be a mother. She wants to sit next to me. Sorry about that. Okay, so I just wanted to get rid of these. Okay. Issues. Okay. Now we've overpaid again. So we need to get this. Let's just simplify further. Okay. Okay, so if you want to the ledger account, you delete this so that you don't get confused. For 500. Okay. And we've overpaid. Put the totals correctly. Okay. 2%. So tax paid. It should be this baby. Okay, guys, let's see how far or close to the truth we are. You guys, you can see. Like, share, subscribe, do the right things, guys. Goodbye.